Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm Yatin Mota.
Well, what a day of recovery it has been, Yatin, given the fact that, we did reclaim that 19,700 mark for a brief, period. But, we have cooled off a bit. But then we did manage to clock a very good triple up move, and yesterday's losses have been recouped completely. And the mid and small cap indices, both of them were in fine fettle. The advanced decline ratio was solid for almost 4:1, and all of the sectors ended the day in the green, of course led by the realty pack. That was the star performer today. Most of the movers and shakers in the mid cap end of the markets at least were from the realty pack, and DLF of course also hitting fresh 52-week high. Aside of that, if you look at some of the other sectors that did well, the PSU banking pack, metals pack, all of these sectors gained in excess of 2% or thereabouts in today's session. If you look at the gainers on the Nifty, Coal India, Adani Ports, that was the top loser yesterday, has made a solid comeback, and Bharti Airtel, Hindalco, Tata Motors, these are some of the movers. And on the losing end, few losers today, IndusInd Bank, Cipla, Dr. Reddy's, TCS ahead of earnings, and Asian Paints, these are some of the laggards. But Yatin, as I mentioned, a lot of movers and shakers from the realty end of the markets, but what about other movers and shakers in the mid-cap?
If you look at the mid-cap indices, they bounced quite sharply, almost 1.5% up for the mid and small cap indices, and the advance decline ratio also reflecting the same, 3:1. So for every 3 advances, only 1 decline. And if you look at the Nifty 500 stocks, we had the stocks like Prestige Estates gaining by nearly 8.5%. We had NBCC 7% up, Sobha Realty up 7%, DLF up 3.5%. So the entire real estate pack was doing quite well. In fact, if you look at other stocks like City Union Bank, Godfrey Phillips, Infibeam, they were also doing well. What was not doing well is the likes of MapMyIndia, Suzlon, Max Healthcare, down anywhere between 2 to 3%. So no big deep correction seen, but clearly the action was in the mid cap space, especially in the PSU banking space also, wherein stocks like Central Bank, City Union Bank, IOB, Bank of India were gaining in trade.
All right, those are some of the movers and shakers in trade today. Of course, some names from the PSU banking sector that was not doing well are once again, have bounced back in today's session. Aside of that, let's take a look at some of the stocks and sectors that are on our radar this afternoon. Of course, talking about realty pack, as I mentioned, rock solid ground. Some of these stocks have gained anywhere between 4 to 7%. Prestige Estates, as you were mentioning, up in double digits or so today. The index per se has hit a fresh 15-year high. Last year, the realty index didn't really have a great run, but this year itself the index is up somewhere on 40% on a YTD basis. It's a strong pre-sales ahead of the festive season, plus coupled with the good quarterly updates that are trickling in from some of the companies, that's lifting sentiment for the realty pack as a whole. But even the RBI's decision to hold on to interest rates is something that provided a booster shot, even though that was known by the street. But since Friday we have seen a very good rally coming in on the realty pack. If you look at the individually, companies like Prestige Estates, now this stock of course hit a fresh record high. It has plans to enter into the Mumbai real estate market as well, and it has launched a few projects in the BKC area, plus it's an office project as far as I know, BKC in the BKC area, plus it has a project in the Worli area of Mumbai as well. So aggressive plans when it comes to Mumbai foray, that's also boding well for the company. And of course the pre-sales, the quarterly pre-sales were in fact had literally doubled on a YOY basis. If you look at Phoenix Mills, there as well the residential sales have surged over 200% on a YTD basis. DLF, if you look at that, that stock has hit a fresh 52-week high. Sobha, Purvankara, all of them doing well. Purvankara management in fact was on CNBC TV 18. The company has indicated that the second half of the financial year will be much better than the first half of the year, and the growth momentum will continue going forward due to new launches. So looks like realty stocks are on solid ground and poised to do well for the rest of the year, Yatin.
Absolutely, and if you look at the real estate stocks, clearly at a tear, and as Nandita was mentioning in the opening comments, 15-year high for the real estate index, and that's it in itself showing you the kind of strong momentum and the underlying fundamentals of the real estate stocks. Moving to Adani Group stocks, and yesterday we saw Adani Ports being the top loser on the Nifty, and today it managed to reverse most of the losses that it made yesterday. In fact, CLSA today has come out with a report with a buy call target of 878. Now, Haifa port currently contributes only 3% to Adani Port's overall volumes. In fact, Adani Group believes that in the next 3 to 4 years, probably they could see break even on their investments as far as Haifa port is concerned. If you look at the port, it's a profit-making area focused on bulk, containers and cargoes. Most importantly, if you look at the retirement costs and the legacy issues which are there in the Haifa port in Israel, probably makes a turnaround case according to CLSA. Most importantly, given the fact that the war-torn area has a limited overall contribution to Adani Port's growth story, CLSA believes it's the best time to probably buy on declines as the valuations for Adani Ports are attractive. And probably on the back of such reports and overall show of confidence, we have seen the stock gaining momentum, almost 4% gains intraday coming in for the stock of Adani Ports.
Right, I think Motilal Oswal has also initiated coverage on the stock with a buy rating, in fact, and that is also boding well. In fact, the firm, Motilal Oswal rather sees an upside of somewhere around 28% on the stock, pegging a target price of 1,010 rupees or thereabouts. But let's also talk about the second stock on my radar today. Escorts Kubota. This stock, of course, I think clocking in strong gains in today's session, given the fact that DAM Capital has a buy rating. In fact, sees a 60% upside on stock from current levels. In fact, it expects the FY23 to FY26 revenue CAGR at somewhere around 17%, and it believes the valuations could go up to as high as 30x. And it believes that healthy earnings, CAGR, higher return ratios, and huge potential to expand its global footprint is something that will be boding well for the company going forward. In fact, DAM Capital met the management of Escorts Kubota, and some key takeaways were shared. The focus on synergy creation between Escorts and Kubota is something, from the merger between Escorts and Kubota, is something that will bode well going forward. And the market share expansion will take place, given the fact that both the companies have relative strength in their respective markets, right? And the company is looking to cash in on that, and the margin expansion will also happen because of operational efficiency and the localization, which is both the in fact I beg your pardon, healthy export growth is also something that will bode well, given the fact that there are new products and they will be exported to different markets, both where Escorts and Kubota have a presence, right? So that will also bode well. If you look at Escorts, tractor sales haven't been all that great, given the fact that there has been uneven monsoon, and for September the tractor sales for Escorts were down somewhere around 11% or thereabouts. So analysts had turned a bit cautious when it comes to Escorts, but given the kind of plans that the management has shared to expand their market share as well as to expand their global footprint, is something that could revive sentiment going forward. So Escorts looks like is in for a smoothish ride going forward, even though tractor sales are yet to pick up.
Absolutely, and I think after the management change, there were reports that they will divest the railways business, and a lot of other non-core assets probably is gaining momentum for the stock. Continuing with autos, Tata Motors is the other stock which is on our focus list today. CLSA again, we're talking about that brokerage has a buy call on Tata Motors with a target of 777. JLR momentum really remains strong. In fact, if you look at the order book, the kind of execution they have been able to do, plus the production has taken an improvement, given the fact that the semiconductor shortage is behind us, and probably the supply chain overall is improving for the luxury car market. So more, JLR produces the better sales and higher cash flows. In fact, in the recent Q2 update, they had spoken about 300-400 million pounds worth of free cash flow, which is possible in the quarter. Also, if you look at the domestic passenger vehicle business, CLSA believes it's all set to gain market share in FY25, and the commercial vehicle business is also set to report double-digit EBITDA growth. Probably not only JLR but also the domestic business is picking up for Tata Motors, which is probably is a silver lining for the entire financials of Tata Motors. So this is one stock again which was gaining traction in trade today.
Well, those were of course some of the stocks that were on our radar this afternoon, but with that we've come to the end of this edition of Closing Bell. A very smart recovery coming in the markets. We'll have to wait and watch whether we can build in on that recovery, and perhaps towards the rest of the, or towards the middle of the month, whether we make a fresh dash at the 20,000 mark or not. But of course, earnings season starting tomorrow, so we'll be watching out for the numbers from TCS tomorrow. and lots of other earnings this week as well. But with that, it's a goodbye. Thanks a lot for tuning in. For all your other news and updates, stay tuned to Money Control.